Hey, what's going on, guys? Today we're going to talk about Starbucks stock and the recent trading recap of my position, how I entered, how I exited, how much I made. It was roughly just 7-8 days of holding this stock. I purchased it the day before the ex-dividend date, so I would also receive that dividend payment coming up. But let's go ahead and look at it a little bit here. So Starbucks only up 7.85% year to date, so it is lagging the market. S&P is up 25%-ish. So it's definitely underperforming the market as far as that goes. They had a earnings miss, not last quarter, but the quarter before that. As you can see, it sold off a pretty significant amount there. I wish I would have bought more down below that $80 level. But needless to say, I'm pretty fine with holding Starbucks long term. They have a market cap of $114 billion. They're paying a healthy dividend of 2.42%. And I just think they're a leader in their space, and I think they will be for the foreseeable future. So pretty much whenever I sell options or enter position on individual stocks, I have to first assess that and be fine with, holding the underlying long term. If something were to happen, if we were to go into a stock crash or anything like that, you just kind of have to understand that and be comfortable with holding stocks long term. If worst case scenario, pretty much what I'm trying to say there. But okay, so let's look at some other data here. So this is looking at the implied volatility. The implied volatility for the S&P 500 is like 13 or 14. The NASDAQ is like 18. So I like to sell options on stocks that are preferably above the NASDAQ at 18. So this one here you can see is 23.8. So that's some data there. That kind of gives you a sense of how much premium you might be able to collect with some of these options. Another thing I like to look at is this is the annual dividend growth rate for the share. So you can see Starbucks has made an emphasis to be a dividend growing company. And as you can see, just in this illustration back from 2011, they've been growing every single year. And that's something that is very attractive to a lot of investors out there. They like dividend growth companies. They like companies that continually reward shareholders year after year. And that's something that, once again, if I had to hold this stock long term, that's something that's definitely nice to have. Okay, so jumping into the spreadsheet here, Starbucks went on ex-dividend date on 11/15. So I entered this position on 11/14. I purchased, roughly 100 shares around $99.65. And then I sold an in-the-money call at $99. So, I knew the dividend was going to be around $60-ish. So I was fine with that. And then I was also going to get, $10 of appreciation here. Because I would be selling my shares away at $99.75. So you can see you add the premium collected plus the strike. And you can see that there. So yeah, I was expecting to get assigned early. That happens a lot, especially around ex-dividend dates, but I did not. So I ended up holding it, and I think the market sold off that Friday potentially. So I was able to buy back that position for $1. I rolled out, I sold another call option for the next week with a little bit more upside premium or upside capital appreciation rather. I sold the 100 call for $74.47. I think that might be an error, actually. That data, those are two different metrics. Let me double check. But I think that first call option was actually, let me see if I can just double check real quick on the computer. I think it was actually closer to $90. So I was getting, $60 in dividends plus the $30 of capital appreciation. 1 second here, guys. Apologize. Yeah, so that was actually $88. So this one here was $88.47. So there's a little bit more of capital appreciation there. So we were going to make, roughly $20 in capital appreciation plus the $60 dividend. So I apologize that that's just a typo on the spreadsheet. So then I rolled it out, once again, another week for $74. So then I was fine with selling my shares away at $100.74. So you can kind of see that there. I also bought a hedge a couple of days later at a $95 put. That's not something I do a whole lot of, but I was like, I'm collecting $74. I can afford a little bit of protection with that hedge to put there. So I ended up making almost $2 or a little bit over $2 on it. So nothing major, but that's just something that I kind of tested around a little bit, and might try to implement that a little bit more. Like sell some calls the upside, and then use part of that premium to buy additional protection to the downside. So I ended up buying that $100 call back for $35.03, and then I did another roll on the 20th. I sold the 101 call expiring 11/22 for $11.51. And then this morning, let's see. Oh no, that was yesterday. Okay, so then yesterday I bought back that 101 call. It moved against me there. And I just kind of wanted more of a downside protection. So I ended up selling the $99 call for 91 cents. So back to my almost original call strike. But then this morning it ripped up a pretty significant amount. So I ended up buying back that call option. And then shortly after I did that, the stock started to rally back up a little bit. And I started averaging out of my position. Got an average of around $100.98 there. So needless to say, though, the overall P&L total return with the dividend was roughly $206.54, or roughly 2% on my original amount risked in about 8 days. Yeah, I haven't received the dividend yet. I'll receive that next week or the following week, the 29th. Yeah, so next Friday I'll receive that $61 in dividends. But needless to say, I was pretty happy with this overall trade. I made roughly 2% in 8 days. So pretty happy with that. I was expecting to get assigned early whenever I, sold a call going into the next dividend date, but it did not work out that way. But yeah, this is kind of the rundown. That's going to be the whole extent. We made 2% in 8 days. Nothing crazy, but pretty happy with that overall. And yeah, I'll continue to kind of document more trades like this, just kind of explaining, what exactly I did and kind of my thesis behind that. But yeah, guys, let me know what you think down below. Once again, this was a Starbucks. I didn't start the position with a wheel. I did start it just, buying 100 shares, and I bought it the day before the ex-dividend date, like I mentioned before. So I knew I was going to at least get that extra $61 of, a payment, or downside protection, however you want to kind of view that. But yeah, guys, that is going to be it. Summary of the trading that I just recently did from last week to this week. So you guys, hope you got some value from this. Please like, subscribe down below. Let me know if you like Starbucks, if you do these types of trading on any of your positions. I would be curious to hear your thoughts.